Well, g'day there, traders right around the world. Thank you so much for joining me on this Wednesday afternoon market recap. What I want you to do in this particular video update is pay very close attention to what I have to say. It is very important that you understand what the market is doing, where it is trading, and what we can expect moving forward into the month and throughout, of course, the month of October 2014 as we round out 2014. Now, at the moment, I'm going to put it out there. The market, I do believe, has made an intermediate bottom. As you can see during the day, the Dow Jones Industrial Average was down almost 450 points. I do believe it did experience a little bit of a rally late afternoon, which has left us with a very big lower wick on the Dow Jones Industrial Average. If we have a look on the S&P 500, you can see this beautiful hammer support candlestick right there at support, and also on the Nasdaq, it's actually a bullish counter attack. So what I am going to say is that the markets look as if they are making that short-term bottom. Now, you understand my larger perspective on the market. I've made this very clear to you. We've actually come down and we've hit that primary support level, that trend line which we've been speaking about. Let me just change to a weekly and show you exactly what I'm speaking about. We've actually come down and we've hit to the penny that bullish trend line which has been holding up the market or establishing the bullish trend since 2009. This is a perfect location for the market to rally. Now, again, the reason I'm making this timely update is because I do not want you to be looking to enter into short positions. I've analyzed our top 12 individual trade lists comprehensively and thoroughly, and there's not much opportunity to at least be entering into new short positions depending or really governing where the market is right now. That opportunity is done. It's over. It's finished. What I need you to do right now is to sit on the sidelines, at least put a tight stop on existing put positions which you are in, or at least shorts which we've gone over for the past 2 weeks. Now's the time to sit on the sidelines. Volatility in this market is going to increase. So you can expect the market at least to rally. You're going to see big up days. You're going to see big down days. But overall, the market is going to rally. It's going to come back up to this level up here, around 17,000 again. And this is really going to be the test which is going to dictate and decide the future of the market moving into 2015. Of course, I'm going to update you as the market moves higher each and every day. But for now, ladies and gentlemen, I would not be overly looking to short the market. Having said that, it's not enough at the moment to be looking to buy the market as well. Volatility is going to come back in. If we have a look at the futures as well, we're moving into, of course, Thursday the 16th of October. Netflix has come out with earnings and it is getting absolutely slaughtered. At the moment, it looks as if it's going to open down here about 300. Here we go. It's just absolutely mind-boggling. It's going to open at about $330 a share. So this could be, and this is what is very well dragging the market down pre-market. Please do not get swayed or persuaded that the market is going to tank today. I do not believe that is going to be the case. Futures are dictated, and of course they're getting moved around by that Netflix earnings. So please do not be fooled by what the market could do today. Again, the markets have established, I do believe, a short-term bottom. Long-term, if we come back up and we fail to make a higher high, we could be setting up the perfect head and shoulders chart topping pattern. It could be a triple top. It doesn't matter what you call it. Extreme sentiment shift is starting to begin in the overall markets. And of course, I'm going to guide you if in fact the markets do roll over. And this is what we call the top of the market, at least for 2014 as we move into 2015. A couple of trade updates, which I will walk through very quickly. Tesla Motors hit our target today down here at 221. This was an absolutely incredible trade, a $13 trade to the downside on those put contracts. Congratulations, traders and students who took that up over the weekend. It was the perfect trade setup. Again, there are so many more which have also triggered. Let me just start at the bottom and move our way up. You can see XOM has absolutely tanked as well. 91.79. We had our target here at 90.35. A bullish candlestick. This is really the theme and the case with many of our top 12 individual trades. Again, it came down to 87.74. It tagged that intraday and then bounced. Starbucks is continuing to break down below $73.10. So if you are in this particular trade, set your stop and capture the profit in that stock. Right now, I would not say to trade Netflix. Netflix, again, is going to open $120 lower or something in that vicinity, about 25%, 20% lower, which is absolutely incredible. It's dragging down the market pre-market. Have a look tomorrow. If it is a tradable earnings gap, I will update you. It's most likely going to be a complete reversal gap, which is going to be or continue to give us some incredible shorting opportunity on Netflix. I will keep you updated. Moving into JPM, really the earnings came out yesterday. It was a bullish candlestick. There was no real trade, at least the downside, based on this bullish candlestick. Again, we'll leave this and we'll speak about this much more or in greater detail over the weekend. HT is absolutely tanked since our order here at $90.82. This has been an incredible trade trade. It's almost down at our second target down here at 86.33. So congratulations on that one. Google has absolutely fallen off a cliff. Now, again, Thursday, the 16th of October, they are reporting earnings after market close. So please do not trade Google. Please exit positions if you are in Google at the moment. I do not think you should be, because we spoke about that over the weekend. FAS has absolutely gone berserk as well. 96.56. We've hit our first target at 92.60. Second entry was 91.13. It just blew straight through that 88.93 target. It actually came down and hit, if I just draw on a new support level for you, an old little support level right here. You can see that touch over here in November and December 2013. We stagnated around here in February 2014. We hit it 3 times during the months of April and May. And again, we tagged it again today. So FAS, you should be closed out of this particular ETF trade. It's been incredibly profitable. Congratulations, traders, on that stock. It's time to move on. Caterpillar is basing right now, I do believe, moving into earnings. 91.05, 90.09. Watch for a bounce, but please do not trade it until earnings is released. Baidu had a quite impressive day. It was really one of the bullish stocks, or the one in the top 12 anyway, which moved against us. Now, Baidu was up about 3.5% today, came very, very close to hitting our target down here at 193.44. That's all well and good. It is still a profitable trade. So if you are in this, just set your stop above the high of Wednesday's candle. What you can do is that if the market gaps down, if the futures are that affected, and if Baidu actually gaps down, you could look to exit out of Baidu just at a market price on the open on Thursday and just lock in the profit, because again, I am expecting that market to at least move higher short term. Now, AXP has absolutely fallen off a cliff. Earnings has come out. I'm not sure if it was actually yesterday or if it has reported it pre-market. I mean, after market close on Wednesday or pre-market Thursday. If this is the candlestick, there is no real trade opportunity on this particular stock. Not until we get below $76.96. It's not really a trade depending on where the market is or where the market is trading right now. Amazon, again, looks to be struggling to break below 303.87. Earnings is coming up very, very soon. So if you did get triggered into Amazon, I would be... if it does break down and move lower, I would be looking to exit that stock and really get out of it at least before earnings. Capitalize on the Netflix disaster, which is occurring right before your eyes right now. Bank a little bit of profit because you do not want to hold into earnings. And to conclude with Apple, again, you can see right here, 97.23 was the entry. We're at 97.54, so we're about 30 cents out of the money, or 30 cents on a loss on this particular trade. But again, if you get rewarded and the market does get dragged down by those Netflix earnings, please look to at least bank some of the profit, at least get rid of some of the risk, bank, again, profit. Set your stop above the high of this candlestick and wait for that market again to rally higher. Avoid the volatility, cherry pick your trades, and then look to get short up here around 17,000. Now, again, this has been quite a bit of an extended market update, or at least, a Wednesday afternoon market update, which I like to provide for you. One other announcement which I will make is that tomorrow I will be releasing a video of 3 stocks in particular which we are going to remove from our pro list, and some candidates which are going to replace them. I'm going to list those stocks, and you can give me feedback on the ones which you want to see as the replacements to possibly AXP, HD, and JPM. All right, they're the 3 which are really up for debate, and what I want to hear your feedback on anyway. So, ladies and gentlemen, I hope you've had a fantastic and incredible trading week so far. I'm sure you have, based on the trades that we've walked through over the weekend. I'll leave it at that for now. This is a quite long Wednesday afternoon market recap. Have a fantastic Thursday and Friday. You'll hear from me, before the weekend is here. Goodbye, ladies and gentlemen.